As technology improves, transparency into your life increases, but to Big Brother, it's just the beginning. Putting the wool back over your eyes, how is it we knew the results decades ago on the same day? Perhaps another pipe will leak or another statistical impossibility will hit the chart in a vertical manner, if you catch my drift. I've said it once and I'll say it again, they always tell you their plan, and I'll play the clip in just a few seconds. In case you're confused, I'm talking about the midterms. Don't worry, higher taxes, bigger government, I'm sure can solve this. Welcome to The Real Report, everybody. Thank you for tuning in as we close in on 21,000 views. We're going to be covering the economy's further deterioration, but it's good news if, like me, you've also needed to buy a car for, about 3 years. Bad news if you're employed at several locations continuing layoffs, which we'll talk about, or if you heat your home during the winter. Oh, wait, that's almost all of us, especially if you're not someone in the top 5%. I guess we'll just have to buy our Powerball tickets and hope for the best, which normally I don't do that, but given it's at $2 billion, oh, what the hell, might as well buy one. So without further ado, here's the clip and then we'll get into the economy. I just can't believe that they actually put out a public statement about this. Listen up.
It took 2 weeks to call every state. In modern elections, more and more ballots are being cast in early voting and also by mail. And many states don't start counting those ballots until after the polls close on November 8th. So you heard the president say this the other night. He has been very clear on this as well. We may not know all the winners of elections for a few days. It takes time to count all legitimate ballots in a legal and orderly manner. That's how this is supposed to work, and it's important for us. It took 2 weeks to call.
Wow, so if you guys need to listen to that again, Benny Johnson posted it. It's all over the internet, of course. The White House press secretary saying, we may not know all the winners of the elections for, a few days. Must find the votes. And I'm going to leave it at that. Speaking of the White House clarifies on another Biden gaffe that we're going to free Iran, which was a little puzzling. Biden admin explains president's comment was made in solidarity with the protesters and not to be taken literally. All right. And moving on, talking about the United States in a crisis, lawless St. Louis, part 1. St. Louis police operating at less than half strength, not enough cops to respond to 911 calls as crime skyrockets. I believe it was Texas I talked about only a couple short weeks ago, that the time for 911 dispatchers was closing in on near 10 minutes. So, again, I just wanted to highlight you are on your own. Be your own rescue party. Get local. And the cost to heat your home this winter could rise 30%. Natural gas users can expect to pay roughly 30% more this season. Consumers who use electricity or electric gas can expect to dish out roughly 10% more. And those who rely on propane will likely see their utility bill increase about 5%. Of course, most of those numbers, just like unemployment, is a bunch of bupkis and probably way worse than they're actually leading on. Unemployment surges above expectations as the number of jobless Americans unfortunately rises, but that is all a part of the plan with the Fed and interest rates rising. The unemployment rate rose to 3.7% in October, and the number of jobless Americans rose to 6.1 million. Labor force participation nudged down 0.1%, and the number of unemployed people rose by 306,000 up to 6.1 million. And in case you are employed, even that might not be enough. Now Americans are saying, I'm selling my blood to eat. I have no choice. Gas, groceries, electricity, and rent. The price of everything has soared to 4-decade highs. Household finances are under severe pressure as wage growth fails to outpace inflation for 18 months straight. Lewis, 31, of Denver, Colorado, says they work multiple jobs and is trying to find a third job due to rising shelter inflation. She told The Guardian she works 6 days a week, sometimes more than 16 hours per day, just to live. I'm exhausted all the time, and on the one day I have off a week, I donate plasma for extra money. I'm literally selling my blood to eat because I have no choice. And the reason I bring this up specifically, the recession has, granted, started, but, metaphorically speaking, it has not even started yet. We are at the very, very, very tip of the spear. We have not even seen the whole iceberg, and things are going to get worse and continue to erode for up to years. Up to years. Historically, it sometimes takes 14, 15 years to get back to break even when these things start. So you better strap in for the long haul, because it's going to be a very long and bumpy ride. We're just now getting back down to some 2008 levels. Whew, the bottom is a far way away. The real wage growth has been negative for 18 consecutive months, and the personal savings rate has tumbled to multi-decade lows at 3.1%, just shy of the record low of 3%. Something is snapped. Unexplained 2.3 million jobs gap emerges in broken payrolls report, which, as a trader, I'm very well acquainted with the fact these numbers are cooked and essentially meaningless anyway, but still definitely noteworthy. Wells Fargo braces for more layoffs as loan volumes collapse 90% year over year. It's a very telling sign about the housing market. The bank had about 18,000 loans in its pipeline in the first few weeks of quarter four. This is down an astonishing 90% from a year earlier when the pandemic housing boom was in full swing. Partly attributable to slowing housing market as rates have risen, and Wells Fargo has historically been the most reliant on mortgages, so you can imagine places like Rocket Mortgage, etc. are going to do worse than Wells Fargo. And like I said in the intro, the used car price collapse, the most since Lehman meltdown. So, fortunately, I have been needing to buy a new car for years, but I've refused to pay the exorbitant amount that they're charging right now. So hopefully they will continue to fall, and maybe next summer will be a little more reasonable. Soaring borrowing costs, the Federal Reserve has slammed the brakes on the once booming used car market. Wholesale used vehicle prices show October's decline on a year-over-year basis was the worst since the financial crisis, ding ding ding, over a decade ago. Used vehicle value index for October declined 10.6%, the worst decline since December 2008 when the global economy was melting down, and the fifth largest decline ever on record. And I believe there's one more noteworthy point at the bottom. Shares of Carvana crashed 24% Monday after the company missed Wall Street's top and bottom line expectations for the third quarter as demand for used cars plummeted. What they're not saying is because of the ridiculous markup. Hertz Global reported its third quarter earnings that showed depreciation costs were rising due to its used car prices at auction fetching lower prices. And Americans' credit card debt growth slowed the most in 4 months as brace for post-midterms plunge. Now, you might be a little confused, so I'll translate this into layman's terms. Revolving debt continues to hit new record highs as the savings rate plummets to multi-decade lows as Americans are forced to use their plastic to maintain living standards. Now, the problem is they've been doing that for quite some time. So the question is, are they at their cap? September's slowdown in the growth of revolving debt might suggest that even the endless consumption needs of the American consumer may have bumped up against the wall of bank credit risk constraints, aka you're at the end of your rope, no more credit limit. Tapped out. Now that the midterms are out of the way, the maintenance of the fake impression that all is well must no longer be maintained. I say here at the bottom now, we suggest you panic. So it'll be interesting to see how things unfold in the coming months, especially as people try to put everything for Christmas and all that on layaway and continued to max out their credit, but it looks like, well, we might already be there. It's not even Thanksgiving yet. And small carriers, of course, talking about shipping, trucking, freight, increasingly parking their trucks. Digital broker Convoy is seeing a relatively large number of smaller carriers putting their trucks on the sidelines for the fourth quarter. Spot markets are really tight, and almost everybody is taking every bit of work they can. Despite the fact that consumer spending is at an all-time high, you're not seeing lots of freight entering the market, with workers going from behind the wheel to behind the hammer and back, depending on market conditions. Talking about those with two jobs, construction and trucking. Market conditions deteriorate in trucking. If there's less construction work, does that mean they're finding other work? Where are the truckers? Where are they going? Where are they working? We're not seeing rates keep pace with costs, and that is definitely squeezing small carriers. Demand is not spiking along with the costs, and it's a case scenario for a tough quarter. I would say the smaller the carrier, the less likely they are able to consistently cover their diesel costs through fuel surcharges. And of course, with the continuing headlines and fear-mongering about the diesel shortage. We'll see how that develops as well. Again, if you guys are new here, go ahead and hit the subscribe button. Everyone else, subscribed or not, smash the like button. Comment down below, even if it's just a thumbs up, it's really going to help me out. And if you guys feel like donating, I'll put the Buy Me a Coffee link if you feel like tipping down below. I'll see you guys in the next one.